Nigeria's inflation rate slowed for another month in July, dropping to 17.38% from 17.75% recorded in June. How much impact will this have on investor sentiment this week? Dare Fajimolu, a Chief Research Officer at Blue Vertex, joins us to unpack this and stories regarding the markets. Thank you so much, Dare, for your time. So, are you concerned, first of all, about the uptick in core inflation? Because it's great to see that the headline number is falling, but we saw the core inflation number pick up a little bit.
Thanks for having me. So, yes, I'm definitely concerned because it's a high inflationary environment, and that definitely will have an impact on the broader economy and will have impact on everybody, basically. So, yes, I'm concerned. But yes, also it's this is the third month where we have a slower growth of growth, slower rate of growth, but the inflation headline itself is increasing, and the increase is across all the core items that make up the index. So this cuts across all the sectors, definitely, and it's going to affect the way I see it affecting the well. Let's look at, we can look at from two aspects. From the corporate side, it's definitely affecting the cost of operations and therefore affecting their profitability. Once that happens, definitely it's going to the level of attractiveness of their stock is going to reduce. And from the investor's perspective, it's going to affect the liquidity in the market, because investment generally comes from, if it's retail investors, it comes from your savings. If it's corporate investors, it comes from your reserves. Right. So whichever way, it's definitely going to affect these factors, and that is going to limit the liquidity. Okay.
Before I move away from inflation, can I just make a quick comment on the pace of the decline? So it's great to see that it's down for the fourth consecutive month, but are you disappointed that it's still somewhere around 17%? As you may be aware, the central bank has suggested that potentially we could be at 13% before the end of the year.
No, I'm not disappointed. I'm not. It's not surprising actually, because of the fundamentals of the economy. It's actually reflecting certain fundamentals. But what is driving the slower rate of growth actually is the food element of inflation. So food increased by 21.03%, relative compared to 21.83% in the previous month. So it's actually food that is driving the lower rate of growth, and that's perhaps because of the harvest season, where we have more food supply in the market. So that's like the main driver of the slower rate of growth.
All right. Quick question here, and in 30 seconds or less, if you can. We saw the market decline for equities yesterday. What, in your view, are the key issues that you are tracking moving forward that could impact market sentiment? Because there was that expectation that the market was on a strong run, a very bullish run over the last few sessions, but then of course yesterday we saw it come back.
There will definitely be profit-taking opportunities from time to time, and like I mentioned earlier, liquidity is still a challenge. Foreign investors are not yet back, as the global economy itself is recovering from the effect of COVID-19 pandemics and so on. So I think the market will still be oscillating between present levels. So I don't expect a major upward trajectory in the market soon.